Yeah, I mean, obviously the big story of late is the ETFs.
Right.
You know, the analogs here. I don't know if you watched any of my tape in Bitcoin Madeira. I gave a good
The
talk
panel
about
is great.
how this kind of looks like Microsoft. You know what I mean? I mean, Microsoft is the
Yes.
base layer of the PC. This is the
You know
base
what?
layer of money. I mean, I couldn't be more bulled up. I mean, you know, it's just, you know, I don't know if you've looked. We could touch upon this relates to the ETFs. We could touch upon this whole multiplier thing. Have you noticed how, you know what I'm talking about? You know, like roughly $8 billion has gone into the ETFs, and the market cap of Bitcoin as a result of, since that started, the market cap of Bitcoin has gone up by 300. So
Yes.
it's a 37 multiplier. And the reason that occurs, obviously, is a lot of coins are in strong hands. And, you know, gosh, I mean, Brennan, if you start thinking about it, I mean, you know, we should record this, with 700 trillion of financial assets, 1.3 trillion of Bitcoin. I mean, it's kind of like, man, oh man. I mean, you know, I don't want to sound crazy or, you know, hyperbolic, but I mean, it's like, you know, I think we might all be really, really surprised by how much this thing can go up and does go up. I mean, I saw Samson Mao in Atlanta. So, I mean, he's like willing to bet his kids on the fact that we're going to $1 million. I mean, you know, Jesus, if we go to $1 million, that's going to be life altering and frankly a shock to the existing legacy finance guys. I don't think we will go there. That sounds a little high to me, but I think 200 or 300 is very possible after the halving, you know, on this next run, because you got a lot of things coming together. I mean, the piece it's interesting to me on both gold and this is that the Fed really hasn't capitulated yet. I mean, they're going to have to, but they haven't, and yet both gold and Bitcoin are making record highs. So, you know, you think it's good now. What happens when the Fed does yield curve control or they capitulate, or, you know, because we kind of know what they're going to have to do eventually, right? So it's, you know, I couldn't be more bulled up on the price of this stuff. I really, you know, I think it's, we're in a very interesting period. I mean, as Saylor said, we're in that gold rush period where, you know, you've only got 10 more years of, you know, real mining supply. And after that, we get down to very, very little left. So, and it also appears to me that we're just coming past that 10% tipping point. I was at a meetup here in Naples the other night, and somebody told me that there were roughly 300 million wallet downloads. Oh, is that right? What was it? Let me get these numbers right. It added up to 300 for the year. I know it was 1 million wallet downloads per day worldwide. I don't know how he got that statistic. I don't know if that's accurate, but if it's any, and that was up from like a couple 100,000 a year ago, and before that, you know, 50,000. So, you know, yeah, right. So, what it suggests is just that there's a lot of, you know, adoption taking place, and, you know, we know what that means, right?
Yeah.
So
there's only like we've talked about many times before, right? I mean, when there's a demand shock, but there's little supply, price is the only thing that moves.
That's
right?
The thing. I mean, I think, you know, Preston said it very well in a tweet sometime in the last month, a week or so, where he just said, you know, the world doesn't understand just how, you know, solid the hands are that hold this shit. I mean, it's not like it goes to 75 and, oh yeah, there's going to be a ton of supply. No, everyone who's in this is like, we're playing for 1 million. I mean, I think when we get to 1 million a coin, you're going to see some people selling, obviously. And all along, there'll be people selling. I mean, people always, you know, this is a savings technology, and people always have reasons to just save. I mean, they want to send a kid to college, or they want to buy a house, or, you know, whatever. So there will be supply, but, you know, most of us, I know, you know, I mean, this high that we're at right now, this is nice, but this is nothing. You know, I would never consider selling at this level. So, and I think most hardcore Bitcoiners feel the same way, right? I'm sure you do. You know?
Yeah, 100%. Mr. Larry Lepard, thank you so much, brother, for coming on today. I appreciate you more than you know, and we have a special relationship, which I really appreciate.
Very kind. Ever since we suffered through that CrossFit workout, hack Bitcoin.
I'm still sore from it.
You're a friggin' beast. I mean, that's everyone.
Oh wow.
I don't think most people know that you played for the USA hockey team. You're one hell of an athlete.
Well,
But
yeah, I'm
anyway,
also 30 years
yeah,
younger.
no, you're a good friend, and I'm happy to be on your pod anytime you like. So
Man,
if
well,
people want to
if
listen,
I'm in your shape, if I'm in your shape, Larry, in 30 years, then I'm doing something right. Well,
well,
let's just say that.
I'm not
Say
where
that.
you are, but that's
Hey,
I've noticed as you get old, it gets harder. My performance has gone downhill, but I'm very consistent. I try and show up every day, and that
really
counts
quick
for a
before,
lot.
yes, really quick before we jump into the ETF
Yeah.
stuff and 6102 and what we were talking about off stage. What's the book that you always recommend to everybody that changed your life just in the
Oh
last,
yeah, this book changed my life. It's called Younger Next Year, and it's Crowley and somebody else. There are two authors, but one of them's last name is Crowley. You Google it, you'll find it. Yeah. So
Yes.
this, I think the federal government, or not the government should do anything, but everyone should buy this book when they turn 50, because what it basically does is it explains to you the aging process and how one can delay the aging process by working very hard at their fitness level. And there are 70 or 80-year-olds who have the fitness level of a 40-year-old, and there are 60-year-olds who have the fitness level of a 90-year-old because they've let themselves go. And this
Yeah.
book does a really nice job of kind of laying out how you should change your mindset as you age. I mean, 20s, 30s, 40s. I mean, you got a lot of free time, you're naturally in pretty good shape. I mean, your body doesn't start. But at 50, I noticed things really start to go in the wrong direction, and so you gotta work out if you want to maintain, the health
Yeah.
that would be worth having when you're older, so that you can play with your grandkids and stuff. So
Yeah. So thank you for sharing that because I think that's, like
yeah,
you said, it's
it's a
incredibly
great book.
important.
I've sent it out to a ton of friends. I highly recommend it. Older people
Yes.
should read it. Yeah.
It's one of the things, one of the first things we conversed about, obviously working out together, is how we met. And then I'll never
Yeah.
forget you saying that and just, how important that is. So,
Yeah.
so I appreciate that. Anyway, going into this, the ETF obviously is the big thing, everything that's going on here. Let's take it out further though, from even
Sure.
modern day. We can touch on that, but to me, it's inevitable. The 6102, what, like everyone's like,
Right.
is government going to buy Bitcoin? Well, they have it. It's right there in front of us. And a lot of people, so
Although I think they still hold some that they haven't sold off from some of the
true.
places where they confiscate. I don't know the exact numbers. As I recall, it's 100,000 plus. Yeah, it's interesting. I mean, there's what's government. There are a lot of buckets in government, and I was just told by my partner last night that he met Jason Lowry at a meetup in Boston last year, and Lowry told him kind of on the QT, but I think I can say it here that the CIA and the Pentagon actually realize how important it is, and so if they have anything to do with it, they would want to own some, and they get the strategic importance of it, which I thought was pretty interesting. But setting that aside, in the 6102 risk, let's discuss that. I mean, so, as Saylor says, and I think he's right, the approval of the ETFs was an enormous thing because for traditional financial people, for traditional fund managers, it removed what, in their mind, I think in many cases, was the largest risk associated with Bitcoin, which is to say, the government hates it. Yeah, that's great. It's all cool, but the government hates it. And they're going to shut this thing down. And we can't, how can I buy something I know the government's going to shut down? Well, guess what? They didn't. And I have to say, honestly, I was very pleasantly surprised. I thought the ETFs were going to get delayed, not approved, et cetera. And I think what it maybe shows you is the power of a BlackRock and, all their money and all their lobbying. I mean, they realized they could make money on it and they pushed it through somehow. So here we are, we've got them. That's great. And that provides some regulatory clarity to a lot of fund managers, to a lot of people who are kind of like, well, look, if the government hated it, why did they let the ETFs get created? And so to me, that's a real big change. And of course, we've seen the response and the price and the flows. We'll talk about that in a minute. And so I think in the short run, there's really, and the other thing is, keep in mind that what it does is it allows them to also have it within their box or within their system. And so there may have been, they may have been game theorying it and thinking, okay, all these people are buying it and self-custodying it, which Elizabeth Warren hates. And we can't see it when it's on somebody's Trezor. We don't know who the hell has what. I mean, we can KYC it and see where it came from, but as you know, it's kind of hard to keep track.
Right.
And if we approve the ETF, at least we'll be able to see it and tax it. So better inside the fence than outside the fence. And so they, if you're being real conspiratorial, they think, well, let's get all these guys inside the fence, so at least we can see them. But I certainly don't think they're going to flip flop anytime soon and go negative on Bitcoin. I think Elizabeth Warren, she wants to prevent all self custody. I don't think she'll succeed at that. She might succeed though at causing all of us to have to report what we own. as you'll recall, we had to check a box on our taxes that said we've been dealing in crypto. Yeah. And it strikes me that this is very similar to when they made us report our Swiss bank accounts, that, you know, they don't want people dodging taxes. So if you own it, they want you to report it. So I could actually see them doing some law like that. But so let's talk longer term, though, about 6102. You know, I don't think today, you know, I mean, it's going up, it's working, it's a good investment, et cetera, but it doesn't appear to most of them today to be an existential threat. I mean, you and I both know it is an existential threat, and that eventually it's going to eat the entire fiat world, and we're going to be denominating our lives in sats. Okay, we know that, but they don't know that yet. But they're going to learn that as they watch the prices go up. And yeah, I mean, you know, there are guys like Joe Carlasari, who's, you know, active on Bitcoin Twitter, who you know, trusts the government, I think, and believes that they would never do a 6102, that's something odd in the past. To which I just say absolute and utter bullshit. I mean, you know, they changed the short selling rules in 2008. They changed the rules in March of 2023 for Silicon Valley. I mean, they change the rules whenever it suits their purposes, and they need to keep their system going, and their system's broken. And when it becomes very, very clear that Bitcoin is eating their system and helping to cause their system to fail, I think entirely they will, you know, either 6102 it or 90% tax it, or, you know, whatever it is they do to it, you know, it'll be the Save American Currency Act, and they'll figure out a way to determine that we're all evil people who are ruining their currency. But I think that's a ways out, because that's not obvious today. I mean, it's, you know, it'll become more obvious over time. How, you know, what are the odds on that? How do I rate I don't know. I really don't. It's probably 50-50. I mean, it's, you know, but I do know that those who are on the inside and who control the system, they just have an enormous vested interest in not having us succeed, because, you know, you know, if we succeed, all fiat wealth goes to zero. And so, you know, they can't really stop us. I mean, and they can't really stop the system. It's too distributed, et cetera. So, you know, they've got a problem on their hands. Now, the other tool I think they'll use to mess us up, and they use this in gold a bit too, is they will, I mean, what's the only thing that's left wrong with Bitcoin? And I don't think it's something that's really wrong, but I think to an outsider or to a newbie or to a traditional finance person, it's wrong.
We want to thank our sponsor. This show is presented by Bitcoin Trading Cards, an orange pill in a pack, making talking about things that normally make you want to cry fun and easy. The scarcest and most educational cards to ever exist, available now.
To try and scare people away from it. I guess that's the point I'm making. But on the 6102, I think it's a very low probability in the next year or two, because I think they've approved it, and they're not going to, you know, they couldn't flip on a dime like that. I think it becomes a higher probability when things are really falling apart. And you know, this is the leading canary in the coal mine, right? I mean, gold, they've managed to suppress that. So if this thing is going to the moon, you know, that's going to be scary for fiat people. And they, you know, when people are scared, backed into a corner, they do crazy stuff. So we'll have to see. And that's why, I mean, I would argue, I don't argue against people who don't want to take the time to self-custody. Well, I think everybody should self-custody. Okay, that's, you know, point one. Mm-hmm. But, you know, I look at, you know, 80-year-olds who don't necessarily understand the technology, don't want to take the time to learn the technology, but they want to be exposed. You know, fine. If they want to buy the ETF, that's fine. I mean, I don't think, you know, I don't think the risk of a 6102 in the next year or two is that high. I think over time, everyone should start into the journey of getting into Bitcoin. And then once you begin to recognize these risks, you pretty quickly get to where I am, which is that you got to self-custody it. You don't want somebody else to hold it, because if it's, you know, as we all say, not your keys, not your coins. And yeah, it would be, if they did 6102, it would be simple. Call up Coinbase, call up Fidelity, call up every major ETF provider and say, you know, sorry guys, the laws have changed. We need to defend the US dollar. Our currency is failing. Everybody who's in Bitcoin, cash them out at this new price, and send them the cash, and you know, send those coins you own, just, you know, give them to us, kind of thing. And that's a possibility. It's a very real possibility. And so if you self-custody, they can't get them. So that's kind of how I see it.
Yeah, well said, Larry. Like, to me, it's, being a student of history, I love Jim Rogers' quote of, the first lesson of history is that most people don't learn from history. And it's, most people, it's not even taught in school anymore. I saw some college, they don't even require a class of history to graduate with a history degree. And we have people that are, to me, like, it's so obvious. Like we just went through 4 years of people getting denied life-saving care from a hospital because they didn't have something injected inside them. And then I've got, a brokerage, accounts, or I've got, pensions, or you've got insurance people saying, well, your stuff's safe with us. You can do it. Like, what do you mean it's safe with you? And you just mentioned Joel Calasari, who I know you've argued, like I've argued with him the same thing, and like whether it's CBDCs too, and like, well, there's rules in place and this and that. The government can change things on a dime whenever they want, and if no one stands up, the 3% or the 1% don't stand up, and the good people and voice their opinion, then they'll do whatever they want. And I think that's the thing that, to me, I don't know what else people are seeking and trying to grasp at, to say, you know what, it is different this time. Things will, they'll just do what we want them to do. To me, that just blows my mind. Like how,
yeah, I mean, there are a lot of examples of government changing the rules to benefit the people in power and the people with money. I mean, they got rid of Glass-Steagall. They, banned short selling. I mean, it goes back to the Hunt brothers. I mean, the Hunt brothers had the silver market cornered, and they changed the rules, and prevented them from selling. A more recent example is what happened with, GameStop. A great movie, that movie Dumb Money, and how basically Ken Griffin, rigged the game in his favor. I mean, this is what they do. They've got the levers of power. They control the government. They got a ton of money, and I think to suggest that when it gets really critical, they won't do some desperate things. I just think that's naive, because every piece of evidence historically suggests that that's what they'll do.
Why, like, where does this come from though? And again, maybe it's not knowing history and people have been brainwashed for so long. And again, these are some of my own opinions. It feels obvious. I know a lot of Bitcoiners feel this way, but just seeing people accept government when, as we know, the Declaration of Independence says it itself, the government works for the people, not the other way around. And I encounter so many people that are even conservative, like on the right in modern, American politics, who say, well, the government won't let us do that, or like the government's not going to let us use Bitcoin. And it's like, we are the government. You realize that? Like, if we just say, hey, change it, they need to change it. And people just can't seem to grasp that.
Yeah, that's the theory. I mean, unfortunately, we're so far away from the Constitution and constitutional republic and what they set up. I mean, it's, we've got kind of an aristocracy / oligarchy with, the people in government and the wealthy people who just kind of set all the rules and totally tip the playing board in their favor. And, if you can't see that, shame on you. I mean, it's pretty obvious. And I think, a lot of people see it, and but I think here's the sad part, Brandon. My view is that a lot of people see it. I mean, you see it in the voting, you see it just everywhere. And people are pissed off. People know something's wrong. They know it's broken. What's disappointing to me about it is that they don't really see the underlying cause. They think it's because blue guys in power, red guys in power, but they're pointing fingers and they're arguing over stuff that doesn't matter, or it matters a lot less than the fundamental base layer of money, which is really what allowed it all to happen and go in the wrong direction. And it's only getting worse. Which is why, there's a silver lining here, and that is to say, as it only gets worse, we're going to get to a crescendo where, it's going to break beyond repair, and we're going to then have to reset. And that reset, I don't know. There was some talk about, I don't know if he has political ambitions, but there was talk about something like a Michael Saylor running for president, right? I mean, I think there's an argument he'll end up one of the wealthiest guys in the world. He's a libertarian. He's actually a really, great human being. He's very kind and fair and nice. And, I'd much rather have him as president than anybody who's on the slate right now. And so I think that, as the Bitcoiners' vision of the world unfolds, there's a very good chance that the politics will get solved too, in part because, the people who don't have Bitcoin will be disadvantaged severely versus the people who do have Bitcoin. And it's, pretty well shown throughout history that the people who end up at the top of the political structure generally have the most money. So, and if Bitcoiners have the most money, we're going to elect a Bitcoin president.
Right.
That's a good thing. You know?
Yeah, it's fascinating. I the last year and a half, like just being at a conference, like I'll catch myself sometimes just like looking around and just like looking at everyone, kind of like people watching and thinking about that very fact of, wow, these people, all these people that we know or are friends with or peers with or whatever it might be that you see, that you're shaking a hand with or nodding to, they're going to be some of the wealthiest people in the world. Like a lot of the people that are at conferences right now. And that's what I think is very cool. Like you said, they're very truly not Sam Bankman-Fried altruistic, but actually altruistic, like actual people that are charitable, hopeful, loving people. That's going to be the foundation of
right.
the world.
I would pick the average Bitcoiner over the average man on the street any day of the week to to be in a position of government responsibility. So
absolutely,
and I do think they're going to be crazy rich. I mean, which imagine what that means for Max Kaiser.
right.
Some of these OGs.
Right.
I've been going to a lot of these conferences and I've heard all these great stories. I've met a lot of people who are buying coins at $1 or $2, and of course I'm massively jealous because I bought my first ones at 300. I heard a really funny story. One guy was telling me he had a conversation with Kaiser, and Kaiser was thinking, there's a guy. Some people might know this guy's name, others won't. Now I'm drawing a blank on it. But Kaiser was bitching that he paid 30 cents for his coins when Trace Meyer, that's what it is. Trace Meyer paid 10 cents for his coins. And Kaiser was thinking, oh, I'm too late. Trace got twice, 3 times as many coins as I did because he was only paying 10 cents a coin and I'm paying 30. And so it's, to Saylor's point that it's going up forever, Laura. I mean, there will come a day when, 20,000, 40,000, 60,000 will seem incredibly cheap. And there will be, in my view, in the future, being a whole coiner will be, you're independently wealthy. I mean, just massively independently wealthy. And so, as we all know, there are 54 million millionaires in the world, 21 million coins, and not, there really aren't 21 because, how many were lost? I mean, it's got to be 10 to 15%. So, but anyway, if you divide it, I mean, every millionaire in the world can only have half a coin. So, and of course, most have 0 coins. And so, and there are 8 billion people in the world. And I mean, the other piece of, the other number that I just find fascinating to me, and we should get into the multiplier a little bit because it's so stunning. What this whole ETF thing has really caused me, it's kind of blown my mind and caused me to think more bullish about this than I was before. I mean, I was bullish, but not as bullish as I am now. Let me take you through the math. 700 trillion, say, of fiat denominated assets, cash, stocks, bonds, and real estate. Maybe and these are round numbers. Maybe 350 trillion of that is cash and stocks piece of it. 350 is real estate. Okay. So Bitcoin's total market cap today is 1.3 trillion. Of course, not all that's for sale, but that is. So the 1.3 over 350, I mean, what is that, like 1/3%, of the total money out there? And so some of that 350 is going to realize that they're being debased and the only way to protect themselves, or the best way to protect themselves, is Bitcoin. And they're going to start coming in and try and buy some pro rata share of Bitcoin. And what they're going to find is it's hard to buy, and hard to buy without shoving up the price. But they are going to shove up the price. And, I mean, even if you only took, say the bond market is 100, say the bond market's $100 trillion, okay, worldwide bond market. Let's say even if only 10% of the bond market comes and says, you know what, we need to hedge against this, we need to get some Bitcoin. Well, that's $10 trillion. I mean, that's 10x where we are almost 10x where we are today. And by the way, all of that 1.3 is not for sale. I mean, so, that gets you from, 60,000, 60 some odd thousand to 600,000. If it were just a straight 1-for-1 multiplier, but it's not. It's better than that, because if you look at, and I found this fascinating. Fred Krueger on Twitter has done some great work on this. Everyone recommend you follow him. It's at .Krueger. $8 billion has gone into Bitcoin since the ETFs got formed. These numbers are a few days old. Bitcoin has gone up in value by $300 billion. It went from roughly $1 trillion to 1.3 trillion. So that would imply that 8 trillion of new flows has shoved the overall value of the asset up by 300%. So that's a 37x multiplier. Now, I'm not saying that the multiplier will always be there. And, what do you mean by multiplier? Well, what I mean is that, as 8 billion tried to buy it, there just wasn't enough available supply to convince people to sell it, it had to go up that amount. And so now think about this. There's 100 billion of bonds and 100 trillion of bonds, and 10 trillion might come after this. Even if only 1 trillion came after this, you would, and let's say the multiplier is not 37. That's exaggerated right now because we're just starting, and the ETFs are a new thing. Let's say it goes down to 5 or 10. It would still represent and just enormous growth. I mean, if 1 trillion of bonds comes after this, that's 10 trillion. The thing needs to go up by, again, you kind of get to 500,000 or 600,000 a coin. So, I mean, I see a world where we're going to go through 100, then we're going to go through 200, we're going to go through 400, we're going to go through 1 million, and eventually, we could go to 100 million, which is full hyper-Bitcoinization. I'm not sure if we'll get there and when we'll get there. They might do a monetary reset before that, but I could easily see 2, 3, 4, million per coin, which is serious money. So the ETF thing has really, it's and Saylor predicted this. He did a great job of saying, hey folks, this is one of the few chances in history to front run Wall Street, because they just don't understand it. And in my speech in Bitcoin Madeira, I said, a similar thing occurred to me. Of course, I blew it. In '86, Microsoft came public, in 1986, and it was trading at 14 times trailing earnings and growing 40% a year, which is pretty friggin' cheap for a company growing that fast. I bought it, with my bonus and my savings, and and I had the experience of meeting Steve Ballmer a few years earlier, and he had said to my roommate, he was roommates with my business school roommate, and he said, hey Larry, this MS-DOS thing is going to be on every computer in every household all over the world. Hundreds and hundreds of millions, if not billions of people are going to use this. It's the base layer of these microcomputers, and they're going to be used to do all kinds of things. This was 40 years ago now. And I couldn't see it. I mean, I kind of got it. I knew he was semi-right, but I didn't fully understand it. And, little did I know just how absolutely right he was, right? I mean, it's, Microsoft is a multi-billion-dollar corporation. It's MS-DOS has evolved into, more Windows and all the other stuff they got. But his software really is the base layer of the whole PC world that Apple's come along to. It's enormously valuable. And, and by the way, back in '86, I also remember how, if you're investing in technology, which I was doing, I was at a venture capital firm, and my job was to pick technology companies. Everybody thought you would buy, hardware, disk drives and memory cards, graphic cards, and because they were real and you could touch them, and microcomputers and mini computers. This was a little bit before the clones were just starting to come out. The IBM PC was introduced in '80, and the clones came out a few years later. Anyway, long story short, everyone was looking at software and they were having trouble with it. They were kind of like, hang on a second, this company sells software, but what is it? You can't touch it. It's just ones and zeros. It's not tangible. Every business in the world. I mean, there were service companies in the world. Everyone got that. You pay somebody to provide a service, and there were people who sold goods. And everyone got that. There were, we've had companies selling goods forever, but there was no one who was really selling intellectual property, defensible intellectual property, which is what the Microsoft base layer was for the PC. And of course it ate the world. And so, I tend to kind of think, I use that analog as I look at, the Bitcoin development, which was really an amazing technological development. And it's the base layer of money, the base layer of future money. It's incredibly obvious to me and compelling that someday this will be money. I mean, to everybody, that our grandkids will transact in sats. You want a hamburger, that's 2 sats, or whatever the relative pricing will be. The dollar will be kind of gone. It'll just be something antique. And I mean, that's pretty extreme to say that, and that people don't like me saying that. And even Saylor says, hey, look, let's not talk about that because that's going to freak the other side out. Keep that to yourself, right? But I think most of us who study it and understand how Gresham's law works eventually come to that conclusion that once it becomes obvious to everybody that this is a better form of money, which it is, because it can't be debased and it's algorithmically programmed to expand at asymptotically decreasing rate, then, it's kind of game over for other currencies. And as Saylor also pointed out when he made a speech on stage in Madeira, he said, the next 10 years are really going to be the great gold rush years for this. It's, because we're kind of at the 10% adoption point. So we're now going to adoption is going to accelerate. And we're also, we've still got mining reward, 6.25 today, soon to be 3.125, et cetera, et cetera. And until 2034, there will be decent mining reward. In 2034, 99% of the Bitcoin that's ever going to be mined will have been mined. And there'll only be 1% left, and it takes another 100 years for the balance. So at that point, effectively, you've got, a stock to flow there's almost no flow. When you got 1% coming in over the course of a year or 100 years, that's not much flow. So it becomes incredibly hard money at that stage. And, it's going to be much, much higher than it is today. And I think even some of us who are in it are going to be shocked. And I say that because it's people would say, well, it sounds too good to be true. That can't be possible. What are you talking about, et cetera. And I say, well, let me draw an analogy. You teleported down to somebody living in the United States in 1900, and you said to them, there's going to be this thing called the airplane. It's going to be invented by the Wright brothers. And in 1960, 60 years from now, whatever, you're going to be able to fly from New York to LA in 4 hours, instead of it being a 38-hour train ride, right? And the person will look at you and say, you're fucking nuts. I mean, there's no way. That's not going to happen. Man can't even fly. That's a pipe dream. And so, but the airplane got invented, and, and then it got slow in the beginning, and it got perfected and better and better. And sure enough, in the 60s, people were flying across country in 4 hours. And so I kind of think it's similar here. I mean, this thing got invented. It only got invented 15 years ago. The first years were really rocky. I mean, I didn't go all in because I was afraid of the technology. I was afraid it might blow up. I wish I had been less afraid, like Max. I mean, Max kind of went all in. And it's, we're now, you're still, people, I've had friends I've tried Orange Pill, and they, recently, and said, oh shit, I should have listened to you when I was 15. I should have listened to you when I was 25. I missed it. It's too late. I can't pay 60 something for this. No, you can, because if it's really going to go to 500,000, 1 million, 2 million, 60 is cheap. I mean, there will come a time when it won't be cheap. I mean, there'll come a time when it'll kind of, it's fully distributed, and its growth will, kind of echo the growth in productivity and the improvements in society. But we're a long ways away from that. We're at least 10 years away from that. So, to me, it's just obvious. And I hope more people wake up to it, because, and the reason I'm such a big advocate for it is I know it'll make the world a better place. And, I think it's important. I want to try and save people from, dying in the legacy system, because the legacy system is going to die. I mean, and there will be pain for people, which is sad, but it just is. And, just like there was pain. I mean, if you were in the buggy whip business and the automobile got introduced, you were fucked. I mean, if you're making, buggy, carriages, you're making horse-drawn carriages, you're fucked. I mean, it happens. It's sorry, but that's how it happens. And it's kind of a similar model here. So,
yeah, people try, recognizing patterns. Some do, and a lot don't. It makes
a
me
lot
think.
Don't. Yeah, and they're not willing to listen to it, and they think it's too good to be true. I mean, I get all this. I get all the FUD, and I also get. I mean, I think to me, it's tragic. I mean, it created a great opportunity for some really smart people to buy at 15,000, but I think it's tragic what Sam Bankman-Fried and all the shitcoins did to the space. I mean, I think they really set us back quite a bit, because, I mean, I have a lot of smart friends who are like, I'm not getting involved with that. There's a bunch of frauds in that area, and
yes.
I mean, I get it. I mean, if you're just looking at it cursorily, I get it. Yeah, Sam Bankman-Fried was a master fraud. I mean, we all knew it. We were telling him. We were writing letters to the SEC saying, you got to investigate this guy. This is bad shit. But, and as we all know, Bitcoin's not a shit coin. It's completely different than all those other coins. But, to somebody who's lazy or just hasn't taken the time to do the work, they could easily conclude that, this is just another one of those. So I get it. I mean, that's yeah, you know all that.
Yeah, no, and this makes me think of numerous things like, there's no top on Bitcoin because there's no bottom to fiat. And again, some of these are novel ideas for the average person. The average normie or pre-coiner is
Correct.
just starting to understand these things. And it makes me
Correct.
like deflation. Like Bob Burnett has a great way of explaining deflation. Why do people, in your opinion, why do people still have such a hard time? Like you get so many people, the MMTers, the Stephanie Keltons, all these people are like, deflation can't work. You can't have deflationary money and all. Why? Like, can you explain, like, once and for all, why what is so wrong with these people?
My view on all of that is I think a lot of the problems and all that, what you described, it's all really kind of driven by recency bias. I mean, first of all, we had the U.S. has been an incredibly stable currency for a reasonably long period of time. Okay, we had hyperinflation in when the country was formed, when the Continental was overprinted.
Yes.
And by the way, that's why the Constitution got written, saying that only gold and silver could be money. And of course, we violated that, but that's a different story. Yeah. The other thing we did is we had huge inflation in the Civil War when Lincoln printed greenbacks and effectively kind of inflated the money supply and so forth. But other than that, it's been a pretty stable place because, as it's interesting to me, and I'm sure you've seen this too. When we go to the shows, people from other countries tend to get it more than Americans get it. And that's because if you lived in Brazil or you lived in Argentina or you lived in Hungary or you lived in Israel or you lived in a lot of other countries that were not the reserve currency, you've had high inflation, sometimes hyperinflation, Venezuela, and you recognize that currencies die. They're not always sound. The U.S. happens to be, until 71, a reasonably well-managed currency that didn't die. And since 71, it's been mismanaged, but because it was the world reserve currency and a lot of history behind it, we had all the guns and everything else, it's the death process has taken some time, but it is dying. I mean, in terms of raw purchasing power, the dollar's lost 97% of its value since we went off the gold standard in 71. And that last 3% is just, we're hanging on by a thread. That 3% is going to go to zero. So, so I think it's kind of a recency bias, and the MMTers and Keynes, I mean, they got sold on the notion, excuse me, that growth is good and that bigger numbers are good. And let's face it, it is an actual natural human, psychology philosophy to want to see number go up. And so, I mean, and if your wage, I mean, let's just take an example. If your wages are going up every year, it feels good. If the price, if the price of your house, the market price of your house is going up every year, that feels good. I mean, you like it. Okay, I paid this in my house. Now, if there's equal inflation to the wages, you didn't get ahead. Your wage went up and your costs went up. So but all things being equal, you felt better that you're making higher wage. You felt better that your house was worth more. And so, in Keynes, they came out of the Depression, the prices of everything had collapsed. It terrified people. It was a horrible experience. And Keynes said, look, we've got to stoke these animal spirits by printing money, MMT, etc. To, when the market delivers us a bust, it's the government's role to try and counter the bust and create growth, even if it's only nominal growth, not real growth. The reason I think MMTers and all these people what they don't understand is that pre the formation of the Fed, fractional reserve banking, and so on and so forth, when we were really kind of more on a gold standard in the 1800s, prices were actually relatively fixed. But what happened is productivity went up, so wages went up because productivity went up, and costs went down. And so, if you were making the same salary, in 5 years that you're making today, but the cost of everything you bought was lower, you'd actually be gaining net wealth. But it might not feel like that because you'd say, well, I'm just making the same salary. Well, yeah, okay. But if we lived in a world where productivity was actually flowing through to the consumer because it wasn't being raked off by the cotillionaires who get to borrow at zero, it's Jeff Booth's point, the world would be abundant and getting more and more abundant with every year, because every year technology and efficiencies allow us to do more with less. I mean, I look at what's happened since the 70s, say, just think of all the technical, I mean, look at us. We're talking here on we're talking on a Zoom call, that I pay $150 a year to be a Zoom member, which is nothing. Yep. And, 10 years ago, you had to have specialized equipment to do a video call. You know what I mean? And, yes. When cell phones came out, in Gordon Gekko days in the 80s, and I remember my boss got one and he was paying $1 a minute to make a cell phone call, right? And now you can have, for, I don't know, 15, 30 bucks a month, you can have unlimited calls. I mean, it's just things are constantly, the world is constantly getting better. The problem is that the monetary system is designed in a way that it's debt fueled, and if number doesn't go up, the debt drowns you. And so so what you've got is what Jeff Booth points out, which is you've got a monetary system that's fighting the natural forces of deflation. And deflation is good. Deflation implies efficiency, and Keynes was wrong in that he thought growth is what matters, and numbers should go up in everything, and so on and so forth. And what the classical economists, what the Austrians understood was no, those number go up can be just a bubble. What we really need is we need more goods for the same price. We need more efficiency. That's all. That's productivity and efficiency, and we don't have a chance of getting that when you've got a Federal Reserve. Federal Reserve sets the price of money. The price of money is the base layer of the entire financial system of all of capitalism. What it costs you to borrow determines whether you borrow or not. If interest rates are 20%, you're not going to borrow unless you have one hell of a project. If interest rates are 0, you're going to borrow and speculate because, hey, what the hell? It doesn't cost me much to do it. And what that interest rates at 0 has done is it's led to just huge misallocations of capital. The interest rate is something that should be set as a balance between those who have savings and those who need capital to pursue projects. And so, there will be debt, there will be borrowing, probably less of it on a Bitcoin standard, but there will be debt. And, that interest rate will be set in a manner such that, you'll only borrow if you think the project you're pursuing gives you, enough return over and above the cost of borrowing and some error, some margin of error. And by the way, interest rates might be pretty low because you'll be thinking, today interest rates get set sometimes highly on projects because everyone knows you're getting paid back in debased money. If you thought your money was going up in real terms 2 or 3% a year, which is kind of the growth of productivity in the world, you might be willing to lend at a pretty low interest rate, recognizing that you're going to get paid back in sats that will have appreciated, right? So it's just it's just shifting your mindset, and it's there's so many pieces of how we got here. Probably the guy I credit the most for screwing the whole thing up is Bernanke. He claimed to be a scholar of the Great Depression, and he just got it wrong.
Larry, he's a Nobel Prize winner. Nobel Peace Prize winner. Come on.
I know.
Come on.
Yeah, right. Yeah, I want this, and they can, play stupid games, win stupid prizes, right? It's like the guy's a fraud, in my opinion. He misinterpreted the Great Depression, and rather than recognize that it was a bubble driven by low interest rates and Fed largesse, he thought that was all normal, and that the crash was a function of the Fed not printing enough money. But at some birthday party for Milton Friedman, he said, yeah, we blew it in the 30s, but thanks to you, we'll never blow it again. And of course, in 2008, very soon after that, he got a chance to prove that as he took the Fed balance sheet from 800 billion to 3.7 trillion. So, to me, he's the intellectual, champion of this whole thing. He had his famous speech. You Google it, the 2002 helicopter speech. You should read it. Yeah. Listen to it. He talked about how
deflation, it can't happen here.
We can't. Yeah, we can't have deflation here because we've got the technology called the printing press, and we'll just print money. And what an irresponsible and stupid thing to say. As if what country in the history of the world has ever improved the well-being of its citizens by printing money? There's never, show me an example where that has worked. I don't think you can find one. So, this guy's our central banker, but, he was very well paid. That the whole system that they've got makes the people who play the game fabulously rich, including him. Excuse me. He's an advisor for Citadel now, and he's rumored to get paid $20 million a year.
It's remarkable, and I have a minute clip I could play here. It's the FDIC roundtable from the end of 2022 when they're admitting that people have more confidence in the banking system than they do. They're in that room. You've got the New Zealand, I think Nico, your show a couple weeks ago with Nico, you guys played the clip with the New Zealand central banker saying it's a great game. We just print money and people believe it. And then you've got the euro. I don't know if you saw recently the euro. It was an old prime minister. I don't know who it was. It was some former leader, I think, in the Eurozone. And he had said, like, we got a bunch of just stagnant euros sitting in bank accounts doing nothing. Like, we can just take those. And bail-ins. I mean, just bail-ins everywhere. And people just think like these things aren't going to happen. Like they're laying all the pipe down, and like people are going to be surprised one day when this happens. Yeah. It's incredible.
Well, yeah, there's that fellow who wrote that book, The Great Taking. I mean, it's very hard to know what will and what won't happen. But I think to assume that some of these bad things won't happen is sadly not. You're kind of misinformed. I mean, I'm sure there were people in the 60s who thought, well, we'll never go off the gold standard. Do you know what I mean? And then, as you recall, Nixon's speech said we're going to temporarily go off the gold standard in 1971, right? Well, how's that temporary piece working out? I mean,
all relative.
Back to the government breaking the rules. I mean,
yes.
Let's go back to 6102. In 1933, Roosevelt realized they were in a depression. He realized that they needed a monetary reset, that they had massive deflation going on. So he had to devalue the dollar in terms of gold. Well, what did he do? He called in all the gold and said, you don't come in, you don't give us your gold at today's dollar price. We're going to send you to jail and fine you $10,000 and so on and so forth. I mean, literally confiscated, people's gold wealth. And then, 6 months later, he repriced gold and devalued the dollar in gold terms 70%. So everyone who had just given their gold, there's people holding gold were holding it to protect themselves against guys like him, and they just got devalued by 70%. And then, of course, a lot of those gold holders went and they sued him, and they tried to, this is illegal. You can't take this shit and not compensate us for it. And it went to the Supreme Court, and of course he packed the Supreme Court, and they lost. I mean, this is the government playing by the government's rules. I mean, I don't think there's anybody who looking at that case today would say that was fair. You know what I mean? But that's what happened. When you're the president and you're talking about the national interest, I mean, you can do these things. I mean, those of us who are in the gold world, we've forensically looked at it very carefully. We've seen all the things they did to suppress the price of gold. I mean, there's no doubt in my mind that there's overwhelming evidence that they've done that. I mean, something as simple as Paul Volcker in his memoir said, one of the mistakes we made in the 70s is we didn't do enough to suppress the price of gold. In other words, we were suppressing it, but we didn't do it. We didn't suppress it enough. So, okay, is that really the role of the government to be suppressing gold? I mean, I don't think so. But it's, I often view the government as a criminal gang. Do you know what I mean? And it's like a virus. Their job is to keep themselves in power. Their job is not to serve us. It's not to make the country better. It's not to do. I mean, to the degree that they keep themselves in power by doing some of those things, well, then they coincide and that'll happen. But in general, job number one is stay in power, and do not rock the boat. We see it everywhere. Like how does Elizabeth Warren, who went to Congress, as a law professor, and a consultant, but making hundreds of thousands a year. I mean, how's she end up with a $60 million net worth? I mean, what's that? I mean, that's, it's just, and she's not the only one, right? There's
Thank you, Larry. Larry, did you see? I just saw a tweet the other day, actually, or it was like this week. It was like Nancy Pelosi's up like 100 million on her NVIDIA call options or something.
Yeah. No, I think somebody actually created a fund, like a Nancy Pelosi stock trader fund, where they follow her, and I think it's up like 40% this year. I mean, because she has to file everything she does. I mean, it's stunning. It's absolutely stunning. I mean, this is, or take, there's another example of corruption. I mean, take Janet Yellen, right? She was, chairman of the Fed, now Treasury Secretary. I mean, she got paid $7 million in speaking fees by a bunch of financial institutions. Now, you can't tell me that she really provided $7 million worth of value. Just speak. No, all of these banks just viewed it as tribute. We'll give her $200,000 or $300,000 to come give a speech because we know that when the shit hits the fan and we need to be able to make a phone call and get the help that we need to bail us out, that the fact that we've given her this bribe will make sure that she helps us. That's why Bernanke's on the board of Citadel, or a consultant to Citadel. I mean, in 2020, this is pretty funny too, because there was an HBS event I went to, and a lot of people were there, and we talked about the Citadel case. And in 2020, in March of 2020, Citadel was bankrupt. They clearly were. The basis trade had completely blown up, and they called up Bernanke, I'm sure, because he's their advisor, and Bernanke called the guys at the Fed, and they got a swap line. They got kind of an unlimited swap line to ride it out. And so Citadel didn't go bankrupt because they're paying Bernanke as a consultant, and Bernanke used his power in government to get them a swap line. Now, all that is denied, but there's a lot of evidence to suggest that it's true. So that's what we're dealing with here. I mean, it's two sets of rules. There's a set of rules for the insiders, and there's the rules for the rest of us. And
Fiat incentivizes that, right? I mean, that's
well, that's exactly right. It incentivizes that, and if we're not playing a fair game. We're playing a very unfair game, which is why, the average working stiff in this country, has to pay 20% on their credit card, or something close to that, and yet Wall Street can borrow at the Fed funds rate, which now is 5.25%, but used to be 0. That's just an enormous advantage. I mean, you give me that deal, and I'd become rich. I mean, it'd be simple. You borrow at 0 and buy 10% yielding securities, and then do it again and lever it up. I mean, no mystery. I mean, this is how you've got all these people who've made, private equity people, Wall Street people, financial players who do nothing but shuffle paper, who've managed to create millions and millions and millions of dollars of wealth for themselves, at the expense of the rest of us, right? Mm-hmm. So it's quite problematic. But the beautiful thing is Satoshi saw it, solved this problem, and it's going to make all of our lives a lot better. And all we have to do is really sit back and watch it unfold. I mean, to the degree that we want to participate and make it go faster, as Saylor said in his speech at Bitcoin Atlantis, I highly recommend people to listen to that speech. I think it's one of his best ones. It's incumbent, ask not what Bitcoin can do for you, ask what you can do for Bitcoin. It's the job of those of us who understand it to communicate that to everybody who doesn't understand it. Yes. For a number of reasons. One, because they save themselves and help them out, but two, because it'll just push this transition along more quickly. And this transition is what will make the world a much better place on the other side. So
how do you? It's like I've got all kinds of Bitcoin trading cards around here. You can see it back here. Obviously, we're gonna at some point we're gonna have the General Lawrence Lepard in the cards. I
think so. Yeah, somebody did a design of it. Told me about it. Yeah.
So that's coming for everybody here in the future here. But to this point of education, like you said, I mean, you shared a good book about JFK. I don't know, a year ago with me, and I think I messaged you on Twitter. I did it publicly so that way other people could see it too, instead of DMing you. But I wanted it out there publicly, just to just continue getting education out there, whether it's trading cards or fun ways to orange pill people and accept truth, like a Trojan horse, like Bitcoin is. Whether it's cards or fun things. What do you do to help educate people? Because obviously going to them and saying, hey, let's talk about JFK, or hey, let's talk about the intelligence agencies or the Federal Reserve. Like, these things are not easy to talk about, but it is the genesis, that's the foundation of understanding a lot of what we're talking about now. Like, what are you doing?
Yeah, it's a big, deep rabbit hole. I mean, probably the thing I do the most of is I give out a lot of copies of Safe's book, because I just think it's the best primer to the whole area. Mm-hmm. I don't start with the fact that the CIA killed Kennedy, or the government's completely corrupt, because a lot of people don't want to hear that, and they think I'm on the fringe, and it kind of disqualifies you. I generally just start with something that I know they basically understand, which is to say we've got a real inflation problem. I mean, hard to find anyone who would disagree with you on that, right? Because they know what the cost of living is. They know that food's gone, and okay, so now I've got their attention. And then I just kind of talk that through with them and try and explain that, there's a reason for that. And it's not because corporations are greedy. It's because of the way, right, as Warren and
Liz Warren,
Biden would say, it has nothing to do with that. It's because, the money's broken. And furthermore, it's sad, but that's, it's going to get worse, right? And so,
for a country that loves band-aids on bullet holes, Larry, I mean, it's like, the corporations are greedy. The Cookie Monster doesn't have enough cookies in his bag. It's shrinkflation. It's logistics problems. Putin price hike. These are all downstream.
All that, exactly.
Ugh.
And so it's, I just try and walk them through, all of the monetary problems we've got and how clear it is. And then I try to explain to them that, there's a solution, and this is the solution. And then, sometimes they want to go down all those other rabbit holes as well. And I'm happy to do that. But I think that, they don't have to believe that the CIA killed Kennedy to accept Bitcoin. I mean, you can kind of get to, you can get to Bitcoin. Yeah. You can get to Bitcoin pretty simply, and it's interesting too, because, you would think, I mean, I find the hardest people to orange pill are the people who are really deep in fiat and made all their money in fiat, because it runs against their beliefs. They don't like it.
Yeah.
Whereas, just kind of a simple cab driver, blue collar worker, they get it. I mean, they get it really quickly, right? Here's this thing that, the reason prices are going up is because they're printing money. Okay, most people can get that. All right. So imagine if we had a kind of money that the government couldn't print. By definition, the algorithm prevents the government from printing it. And then, okay. And then they usually have some questions about, well, is it real, and is it going to work, and how do I, it's complicated. I mean, they're all the issues that we all encounter. And, you get all the various things. Well, I can't touch it. The gold guys say that, or you get the, and there's FUD, right? There are lots of varieties of FUD. But, those of us who have been in Bitcoin for a while, we kind of know the answer to every type of FUD. Okay, it's MySpace versus Facebook. Well, yeah, and maybe it was in the beginning, but, this is so far out in front now, there's nobody's ever going to catch up with it. Do you know what I mean? Yeah. I mean, Facebook's not going to get replaced. Google's not going to get replaced. I mean, it's, and the network grows every, Saylor says every addition to the network strengthens the network. And the network is growing very rapidly. I mean, I was at a meetup the other night. I'm not sure this guy had the right numbers, but if it's true, it's really quite stunning. And he said that there's some site that tracks the number of wallet downloads. I don't know how to get that information, but and worldwide wallet downloads is running something like 1 million a day now. Wow. Right? And so 365. So we're down 300 million wallets are getting downloaded a year. I mean, this is growth. And he said he had the trend curve. And it was, a year ago it was less, and 2 years ago it was less, and it's just that just kind of continues to grow every single year, every single day. And so, as we all know, the hash rate grows. We all know the number of coins that aren't moving is 70%. That's growing.
Grow and grow.
Yeah. I mean, as long as all of these user metrics are growing, I really don't see, it's and people say, what's going to crash? I say, why? What am I missing here? Do you know what I mean? I mean.
Right.
I can't see what's the catalyst for the crash. I mean, I can see though the government throwing sand in our eyes. I mean, I can see high taxes. You got to report. I mean, there's, the government's pretty good at using FUD, and they will, particularly as it gets to the point where they really realize what a threat it is. They might come out with some very serious FUD. For those of us who've been in it a while and are used to the drawdowns, we're gonna be like, yeah, okay, so what? I ain't selling.
Yeah.
And it ain't dying. And in fact, this drawdown is really nice. I'm going to buy some more sats.
Right. Yeah. So the logs, so you mentioned this a second ago, network effect. And I know we'll wrap here in a handful of minutes here. I know we're getting over an hour here. The log chart really was one of the things, because I was similar to you. I mean, you have much more experience than I do, but after the 08, 09 crash, I was very political, and I got into Robert Kiyosaki and Mike Maloney, the guide to investing in gold and silver. And I was like, I could see there's a game being played. Both sides were in on it. That was my window into that in 08 as a senior at Michigan State, and leaving and going to play professional hockey. And I would spend all my time researching and studying, and I realized, wow. And then you're getting into Creature from Jekyll Island and into the, and so learning what invisible crashes and measuring assets against each other and how to actually figure out real value of things. And the log chart though, so fast forward 5-6 years to similar to your story, like 2017, in that's where Bitcoin really made sense to me over gold and silver. It was the network effects and bringing everyone together, Metcalfe's law and everything. That was huge for me. And really, instead of just seeing a linear chart of like, oh, it's just crashing up and down, it was no, there's a growth to this. There's a network being built, and that was huge to me.
Well, higher highs and higher lows, right?
Correct?
I mean,
Correct.
You could see the adoption. Yeah.
Yeah. What was your like, story really from transitioning from gold to Bitcoin and seeing that? Was it something similar to that, or how did you kind of make that jump?
Similar. I kind of sensed it was a faster horse. The volatility obviously was a concern, but I could get over that. Like I said, I bought my first ones in 2013. I paid 300 and something. My concern was always technology related. I thought, great, programmatic money that can't be printed. Yeah, I'm all for that. But you're probably not as familiar with this, but I've been a gold guy for years and years, and a sound money guy for 20 plus years. People tried to do this before. I mean, there were a bunch of precursors to Bitcoin. There was eGold, and I'm trying to remember the names of them, but there were 4 or 5 other attempts at creating quote unquote digital internet money. And they all failed. And they all failed because they couldn't prevent the double spending problem. The Byzantine generals problem didn't get really solved. They had pieces of the puzzle, but not all of the pieces. And so I was disadvantaged that when Bitcoin came out in 2009, 10, 11, I thought, oh yeah, that's nice, but this is going to fail too, right? Because I'm just looking at, people tried this, it doesn't work. And so what it took for me to get more and more conviction was really spending enough time, digging deep enough, meeting enough technologists who explained, the halving and the SHA-256 and the blockchain and the elegance of it all. And it just continued to work. I mean, it was, and if you talk to some of the core developers in 2013, even they would admit that they weren't sure, that there were issues, and they closed some back doors as late as 2017, 18, 19. I mean, there were, you had the block wars. I mean, they could have expanded the block size more, and that would have potentially led to trouble. You had the forks, the hard forks, and most of those they went to zero, but I got them all, and I sold what I could. It was liquid I sold. So I would say in my case, it wasn't really, and it was one thing to go from a couple dollars, $10 to 100, and 100 to 1,000, but it was kind of bouncing around there. I think when in 17 that ripped to 17,000, that was like a wake up call. I was like, holy shit, this thing is explosive. You know what I mean? This is, we're not kidding around here. And so now I think at that point you'd had 3 or 4 down cycles where it'd come back. Whereas, and before I kind of like, well, each one of these could be the bursting of the bubble, but it just kept coming back. And so I got very comfortable after the 2017 decline to 10 and then 4 to buy more. And it just, my confidence in it kept growing. It hasn't had any problems. I mean, it's worked, 99.9% of the time. I mean, occasionally you'll have, 2 chains that'll, go alongside each other for a block or 2, and then the longer one reconciles and the other one goes away. So I mean, there've been, you can't always know your transactions confirmed in 10 minutes, but I mean, it's worked. It's worked flawlessly. And so somewhere along there, and then of course seeing Saylor, who's a rocket scientist, get involved, and obviously he's very technology savvy, and for him to get comfortable with it, and it's, your confidence kind of continues to grow that the technology is sound. So for me, it was always a sound technology issue, but also, adoption. I mean, as adoption continued to increase, I got more and more comfortable with it. And I think now, I mean, in some ways now, I mean, some people have said that, it's actually a better bet now in the 60s with all the data we have behind us than it was, at 5 or 10 when, it was 2018 or something. And there were still issues that were unresolved, or certainly versus the 13, 14, 15, I think there were a lot of unresolved issues. It was very hard for me at that time to think, I'm going to put a ton of money into this new experimental money. You know what I mean?
Yes,
it was hard.
I agree.
But some people did, and God bless them. I mean, they did extraordinarily well.
What do you, last 2 things here? There's so many things. So we'll do it, maybe in a few months we'll do another one. I have a list of how long things I want to get to you with, but I want to be cognizant of your time. So I just saw someone saying this, that the debt could hit in their opinion, 40 trillion by the end of this year. And
I think that's right. Yeah.
Yeah. And I don't know who it was. I don't know if it was someone in the Bitcoin space, if it was
I don't know if it's the end of
Lavish,
this year. I think it might have been the end of next year. I think
maybe it's the end of next year.
Yeah,
And
we're adding a trillion every 100 days. So we're at 34. So that would imply that in a year we'll be at 37. Yeah, no, maybe it's not even the end of next year, but sometime next year we'll be at 40. Yeah, we're running at a rate to hit 40 pretty quickly.
So my big question to this, like a year ago, year and a half ago, or maybe it was like even 2 years ago, when I was making some content, and I had people really just like, oh, there's no way. I was like, the dollar can lose 99% of its value again from here, and we could be at 100 trillion by the end of the decade. And people were just like, oh, what are you talking about? And I was like, it's exponential. You know, like how does this game play out to you at the end of the day? Like, where do we go? How does this transition off the Titanic?
Well, and by the way, that's the, I've often said, I think this, we get to hyperbitcoinization in the 2035 area, but it could come much sooner. It really could. I just don't want to predict that and be wrong. I mean, all along I've been thinking to myself, well, I mean, look, when 2008 happened, I thought the dollar was going to die, right? And obviously I was very wrong. So I don't want to overpromise and underdeliver. I'm pretty sure this whole thing plays out by the mid 2030s, probably a lot sooner, because it is kind of the suddenly then all at once. And I think. Did we talk about Silicon Valley Bank earlier? I mean, I like to use the Silicon Valley.
That was one of the things. Yeah, we didn't
I
even
like
get to
Silicon Valley Bank as a comparable.
New York thing too, community.
Yeah, well, this morning I just bailed that out. But in the Silicon Valley Bank case, they sold some bonds. They took a markdown. Some accountants did the math and said, "Holy shit, this thing's worthless. There's $20 million negative equity here, $20 billion in negative equity." 6 days later, the bank was gone. And one of those 6 days, $45 billion worth of money went out the door. I mean, it was a digital bank run. This was not George Bailey in the savings and loan. This was, one day, 45%. So what does that mean? It means that everyone who was a depositor there very quickly concluded, oh shit, this thing's no good. I got to get my money out of here, or I'm going to, obviously anything you had on deposit there over and above $250,000 was at risk. Of course, it turns out it wasn't because they bailed it out. But so that kind of contagion, that kind of awareness, that quickness, that could apply to a reserve currency. Do you know what I mean? Now, we're a long ways away from that, I think. But what happens? I mean, here's a scenario. What happens when the U.S. 10-year trades at 6, 7, 8, 9, 10? Okay, because people aren't trusting it and they're dumping it.
Right.
Okay, and the dollar is going down, and people, the Fed says, well, this is a real problem because we're gonna have to pay more interest on all our bonds, and the deficits are going to blow out. And so the Fed says, okay, we're coming back in with QE and yield curve control, and the amount's going to be unlimited. And and then the first couple of months, it's a big number. It's trillions and trillions, and the Fed balance sheet, which is now in the 7s, I think it went as high as 9, it's come back down. The Fed balance sheet goes to 11, 12, 13, 14, 15, 18, and suddenly, what'll happen is, Brennan, what I think will happen is that awareness will be spreading of what's happening here. It's like, oh my God, they have lost control of this monetary system. They cannot, there is a quote unquote, soft run on the dollar. And people don't want to hold dollar denominated bonds. People don't want to hold dollars. People are buying things that are an alternative to that. By the way, when all this is going on, Bitcoin's gone from 200 to 600 quickly,
right?
And gold's at 3,000 or 4,000. So you've got those signals. So, those of us who are in the know and people who are aware of monetary economics and how it all works are like, holy shit, this currency's failing. I've seen this movie before. I've seen it in Zimbabwe. I've seen it in Venezuela. I've seen it in Weimar, Germany. And then what happens is you get into the panicking first is the right thing to do. He who panics first panics best. By panic, I mean you sell the dollar and you buy something that can't be printed, right? And of course that just makes it worse. And I'm very much like Silicon Valley. Everybody and their brother says, "Get me the hell out of this thing right now." And so Bitcoin goes to $1 million. And of course a lot of people are afraid to buy it. Like, how the hell can I pay $1 million for it? Well, guess what? It's going to go to infinity in dollar terms because the dollar is going to go to zero. Yep. So, I'm not predicting this. I'm not saying that's what will happen. I have no idea the time frame, and I'm not trying to be a doomster. I'm just describing the pattern that has happened when other currencies fail. Now, we've never had, well, other than Rome, which, they debased the denarius over a couple hundred years to zero, but in general, reserve currencies don't fail, right? I mean, this is the U.S. dollar we're talking about. It's the world's reserve currency. I say that in general, but there's a first for everything. And it's to my way of seeing it, it's not out of the realm of possibility. It definitely falls into it could happen, can, and if it does happen, you're going to be really glad that if you had savings. By the way, stocks will go up a lot too, because on the other side, the stocks will be pricing whatever the new currency is. The loser, the sucker at the table, as Luke Grumman likes to say, is the bond market, right? I mean, the bond market is just going to get wiped out, just totally wiped out. I mean,
Larry,
this is why this is why what Saylor is doing. Saylor is doing the Hugo Stennis trade, right? Which is to say, he's borrowing, he's borrowing and he's using, in dollars, so he owes people back dollars, and he's using those dollars to buy Bitcoin. And the Bitcoin will go up in price and the dollars will go down in value. He'll pay him back in worthless dollars at some point in the future. And I mean, this is how, in my opinion, he'll end up being the richest man in the world, in 5 or 10
Absolutely.
years. So.
Absolutely. I know we got to run here in a minute. That to me is the bond thing. You just touched on something again. We can touch on this more in the future, but the bond thing to me in general, government, like federal bonds, not maybe municipal, maybe, but the government bond market to me just seems immoral. You're guaranteeing yourself slavery into the future. I don't understand that at all, and you can't convince me otherwise. You're guaranteeing you and your kids are in slavery in the future to pay taxes to the government. That's beyond me. And I wanted to get your takeaway from Madeira also, by the way, before we run to what your thought was, your big takeaway from Madeira. So those two things.
Yeah. So, well, you're right about the government bond market, and they've got a lot of people that are kind of brainwashed, and a lot of large organizations have to buy bonds. The banks have to buy bonds, and who knows? For all we know, the Federal Reserve is covertly buying bonds. I mean, they will do anything they can to keep the system alive. We know that. We've discussed that. My takeaway from Madeira was it was fabulous. It was just a great conference, one of the best. It was pure Bitcoin. The Bitcoin conference in Nashville, it used to be in Miami.
Yeah.
I always have trouble with that because it's in order to make money, they let a lot of the shitcoiners there come in. And to me, Bitcoin and the shitcoins are two different things. They shouldn't be in the same conference. So it was pure Bitcoin. There were some great attendees. It was just an incredible vibe. And, I don't see how, I think it's worth taking the time. There's certain speeches you really could listen to. If you Google Bitcoin on YouTube, Bitcoin Atlantis, the first day, the Saylor speech at 2 p.m. was good. There's a panel that I did that was at 5. It's the 8-hour mark on the video. Jeff Booth's speech on Saturday was incredibly good. There were others with Lynn Alden and so forth. So, yeah, it was a great conference, and I think that it's, if you're into Bitcoin and you can afford to go to these conferences, I mean, they're very human scale, and you can meet all these people. I mean, I saw a Saylor at one of the parties. He's just talking to plebes. You know what I mean? And it's like for hours. You know what I mean? I mean, it's just, there's no ego. All Bitcoiners treat other Bitcoiners with humbleness and respect, and so it's a fun experience. I mean, the other one I would speak very highly of is the Pacific Bitcoin out in Santa Monica. I think it's in October. That's thrown by Swan and Corey. Same thing, pure Bitcoin signal, great people that are there. Very much worth taking the time to go to. And there are a lot of other good ones too. I mean, I'm going to be going to the halving party in El Salvador in about a month, which should be fun. I'm going to go to Bitcoin Canada in late May. And I might be going, I'm not 100% sure, but I might be going to BTC Prague in June. So, and that's it. I mean, there are 10 other ones that, I'd like to go to. You can't do them all. There's BitBlock Boom, there's Unconfiscate. And there are a gazillion. My partner's at one right now out in Jackson Hole. It's a, kind of a big Bitcoin ski trip, related to the mining business, but, you can't do everything, right? And, but they're good. They're good for networking. They're good for getting information. And they're good because they give you a sense of what this community is about, who the people are, and it's really it's a great bunch of people. They really are great people. So
really is. And a community is the number one thing in a survival situation, right? Having
absolutely,
community around you. So that's
absolutely,
that's
yeah.
where it's
No,
at.
it's wealth. So
It
yeah.
is. Appreciate you, Larry. Thank you so much. Where can everyone
Oh,
find you?
yeah. So I'm on Twitter under my name, Lawrence Lepard. I make a lot of noise. I hate the central banks during
Yeah,
negative,
you too.
right? You know that, but they've caused a lot of pain. I think they deserve to be hated. So I
It's
don't
amazing.
apologize for it.
You're one of the best follows by far, because I
Oh, no,
guaranteed every day I get an
I
actual
make a lot of
chuckle.
noise. Yeah.
Oh yeah, I get an actual
EMA2,
chuckle.
Edward Mark Alpha, the letters EMA2.com is my website. It talks about the funds we manage. We do a quarterly macro letter that's free. You can sign up for it. We will never spam you. And that's, I think some people find that interesting if they want to every quarter get an update on how we see the world and how we see this sound money thesis unfolding. You can find it there. There's a lot of gold stuff there too. As you know, I came from the gold world, still in the gold world, but transitioning away from it as time goes by. I think, and I don't, in nominal terms, gold will never go down, and gold is it's going to protect you very well in this particular crash that I see coming. But having said that, I think Bitcoin is actually better protection. So of the two, I mean, Bitcoin really is the fastest horse, and so I tend to recommend that. I mean, if you can't stand the volatility, then gold is a great sound money choice. I recommend that everybody have some Bitcoin, and you weight it such that you can stand the volatility. I mean, I think the worst thing that can happen in Bitcoin, I've seen it happen to people price chase it, they buy it at the top. Some people bought it at 68 the last time around, and then it went to 15 and they felt like shit. And some of them sold it, right?
Mm-hmm.
And
Yeah.
those of us who were in it know that was the wrong move. But if you don't really understand what you're buying and why you're buying it, that can happen to you. So, I think anytime you buy Bitcoin, you have to mentally steel yourself and realize, in terms of what percentage of your net worth it is, this could go down 50%, and I don't care. This could, because in 5 years it'll be much higher. So, but it could, in the interim, it could go down 50%, and that, you got to be prepared for that. And so, as we orange pill people, I think it's important to point that out. Excuse me.
Thank you.
So,
Thank you, Larry. Thank you so much
yeah,
for your
thank you.
time.
It's always fun. Hopefully, we'll see you soon at one of these shows. In fact, I think
Yes.
Canada, right? Possibly.
Yeah, probably. Yeah, in a month or two in Canada. Yes.
Okay.
So looking forward to it.
Sounds great.
Keep
Doing the work.
We'll
Keep doing the work. I love it.
Same, brother.
Keep doing the pods, all of it. Anytime you want me back, I'm happy to do it.
Love it. Let's do it. Thank you for checking out this episode of the Playable Characters Show, brought to you by Bitcoin Trading Cards. Make sure to subscribe so you don't miss any of the future Bitcoin and financial experts we have on the show. Plus, we will be doing random big giveaways throughout different moments of shows of collectible cards, sats, merch, and more from guests, so you won't miss anything. This show does not constitute any investment advice, only freedom advice. Everything you see here is opinions from the host and the guests themselves, nothing further. Please don't trust, verify. For full transparency, I do lead marketing efforts at Bitcoin Trading Cards, where we are trying to spread freedom to all of humanity and orange pill the world one collectible physical trading card at a time by making things fun and easy to talk about that normally make you want to cry. You can reach me directly through my email, brandon@btc-cards.com, with any inquiries or playable character suggestions. See you on the next one.